Good evening, everyone. Today is Sunday, October. Oh, should have really figured out what day it was. October 23rd. And sorry for making this video so late. And this will be another very quick video because there is another podcast I will be doing tonight on the World Crypto Network. And nothing has really changed all that much from the previous week. So we will just walk through just our daily charts, not going to really get into the weekly, and I'm not going to get into the too much macro this week because it's really going to be all about the election anyway. There may not be a midweek video because tomorrow I am off to Vegas for a conference, and then I'm going to come back to New York and then have another conference here in New York immediately. So there may not be a midweek video. If something really crazy happens in the market, then I will make one. If everything is still kind of not knowing which direction to go, like we have been the last few days, then there may not even be a need for a midweek video. Everything really is going to hinge on the election. Okay, so let's get to it. A quick look at the futures here at 10:30 p.m. East Coast time on Sunday. Oil is coming down a little bit. Gold is coming down a little bit. Again, nothing to write home about. The markets are flat. So that simply tells us that nothing crazy happened over the weekend. The dollar is still very, very bullish, which we're definitely going to talk about. All right, let's take a look at the S&P 500, and we really have absolutely nothing. We have a major line of support and resistance right here. We pierced it intraday, but nothing really came out of that other than a really clear reversal candle. Put a box in here. And since then, for the last week, we're basically in a range. I believe last week what I said was I was looking for some upside, at least into the 50-day moving average, and then from there probably down. I'm also expecting a Trump surprise in the election. Maybe too emotionally invested. I don't know if it would be scary if Hillary's elected. So if anything, I'll definitely take Trump over Hillary. But we can do a whole other episode on that. If there's a scare in the market, that scare can be pretty big. Of course, it's unfounded. Trump would be really good for corporations in the stock market if he does try to lower the income tax. But again, like I said, that would be a whole other episode. So as long as we're in this range, as long as we're staying under the 50-day moving average, as long as we're staying above the support line of 2120, then there's really not much you can say other than market is waiting for the elections. A quick check on the NASDAQ because it is acting a little differently than the rest. And over here, you can see that we are above the 50-day moving average, which is different than the S&P 500. But again, we're kind of stuck in the range. One last point I forgot to mention on the S&P is if you look all the way at the bottom at the MACD, it looks like we are starting to cross, but we don't know if that's going to lead to a big breakout or not, especially with the election coming. I wouldn't put much stock into that. All right, let's take a look at gold. And again, not much is going on. We can quickly see that the MACD is in our bullish favor, and the RSI has come out of the oversold condition. So what I did say last time is if gold can close above 1270, that would be a bullish sign. Now, gold did break above 1270, but it didn't really close above it and then trade above that, we kind of pulled back. Now, the good news is that the 50-day moving average is moving up, and it seems to be dragging the price with it. So I'm still leaning bullish on gold. Let me draw one of these. I'm still leaning bullish on gold into the moving average, even though it hasn't been all that useful. But our momentum indicators are reversing, so there could be a little life in gold. What is stopping gold from moving up right now is the strength of the US dollar. And I'm going to talk about that in a minute. But gold might move up. Again, if there is a scare in the market with a Trump surprise win, that might scare people into gold. Remember, that scare will be temporary. Trump is clearly the much better candidate, which would be much better for the economy than the socialist Hillary Clinton. So all of these panics that would take place if Trump is elected are completely unwarranted, and they're going to catch everyone by surprise. And when the market reverses, it'll reverse so quickly, people will miss out getting a chance to jump on board. So after that, that is still very possible, but we will talk about that possibility if gold can break out to the upside at least a little bit. On our downside, what we are looking for is the support at 1250. Oh, trend line here. The support at 1250, and if we go below that, then gold might have a tough 2017, at least the beginning of 2017. All right, oil's been messy. Oil's been messy. I don't know how else to describe it. So we broke out and made a new year-long closing high, which killed our bearish momentum, which I was leaning bearish. I'm not going to deny that. Over here, I was leaning bearish, at least to 48, probably further down all the way to 45. It would have been a nice risk-reward trade. Now, the risk would have been very, very small because right here, your short trade is taken out, and a bullish trade is actually on the board at this stage. But then the next day, the dollar takes off to the upside and we fall back down. So if we're in a hold right now. So that means if you're short, you can probably hold on to your short. If you're long, I would still hold on to the long because you do have a couple of bullish candles, even though they're not really taking place after it's only taking place after like one big down day, which is not really a reversal candle. But when I see these indecision candles, it can really go both ways. So me as a trader, if I was trading oil, which I'm not at the moment, I would be whipsawed right now. I may have flipped my short to a long. I may have well, if I stuck to my guns, I would have exited the short, so I definitely wouldn't be short. I might still be holding on to the long because I do give my trades a little bit of a leeway, and I am not scared until I see a close below this 50. So even if I had entered the trade long on oil around 51.50, that would have been my entry. I would have, I'd still be holding on to that long until I see a close below 50. And we'll see what happens later on, tomorrow and early next week. But again, everything is in a holding pattern because of the election, except the dollar. So the dollar is the one that took off. So the dollar broke 98. And remember, we were overbought. We were overbought. And now we're going more overbought. The MACD is nowhere near slowing down, still going up. And it's been a big run. It's been, as you can see, it's been the best run in 6 months. How long can it last? I mean, things can be irrational for a while, but the USD does need a break. The round number 100 mark is critical. Round numbers tend to cause havocs with all assets. They like to be attracted to round numbers. They also like to reverse at round numbers. But we are breaking out. I was looking for the dollar to take a break. And I was looking for the dollar to pull back down in order to set up for the election. But the dollar is rising, and all we can say is, well, it's still rising. You got to look at really long-term charts. I am bullish on the dollar long-term, like I've been saying when we looked at our euro charts. So if the dollar is going up, but gold isn't really going down, because gold was starting to go up, and now it's kind of flat. Same thing with oil. So the dollar is causing a little bit of havoc, but it looks to be confined to the dollar. The rise in the dollar isn't dragging dollar-denominated assets with it, which is a good sign for commodities. Let's briefly take a look at the euro. And there it is. Wow, I did not even know that because I don't really trade currencies. But now let's just go straight to the weekly. I don't even bother with the daily chart of the euro. My projections of the euro are so bad that, I mean, looking at a daily chart wouldn't serve my purpose. So again, what I'm looking for in the euro is this repeating. When will this repeat? I don't know. Maybe when Deutsche Bank finally collapses. And then this very extreme, and this very extreme. So I am looking for a repeat of that. Is it going to happen later this year? Next year is 2018. I don't know. But my projections on the euro are that. Timing is hard to say, but obviously parity is huge support when they're at 1-to-1. Other than that, looking at the weekly chart, there's really no one level. We might have to do some more advanced analysis, maybe throw some Fibonacci projections off of the last down wave. I'm not a believer in Elliott waves, so you'll never see me use those. But there are other means. Let's take a look at the pound. Also on a weekly chart. The pound is still going down. I am more bullish on the pound than I am on the euro, but the US dollar is going up, so obviously the pound will go down. I believe the pound is oversold and it will rebound, but the strength in the dollar will continue, so the pound will also fall, but not like the euro. I mean, 5 years from now, there may not even be a euro, but there will be a pound. There will be a British pound. So I think it's due for a bounce. But so but the dollar is still going up. So once the dollar finally takes a break, the British pound should rebound. The euro, perhaps not. Okay, and finally, we need to talk about Bitcoin because it had a nice jump. You see a price of 665 on this chart, but that is a daily updated price, and I don't believe it's updated today we have pulled back a little bit. This is also the Brave New Coins liquid index, which does factor in an exchange from China. And this has been attributed to being driven from China, which does make sense a little bit, but Bitcoin is still generally priced in dollars, so I kind of try to follow it in dollar terms. So what we can project here is that we are back into the overbought RSI territory, which is not ideal. You want to see a reset. It's kind of similar to over here when we hit the overbought condition while not really making any new significant highs. This was around 460 area. We pulled back a little bit and hit a huge overbought condition when we swung all the way to 750. This was the speculation over the halving. And if you look at my videos, my Bitcoin videos about the halving, what I was saying for almost a year leading up to the halving is that speculation will drive it due to the halving. But after the actual halving event, I expected a fall in prices because miners should have rationed what they mined as reward pre-halving in order to run steady operations. So they would have been selling more coins than new mining after the halving. Though some other things caused the fall, including a crash at Bitfinex, and we did reset and finally hit our oversold condition on the RSI. That allowed nice conditions for us to go back up. And now we may have some more highs, but eventually we will hit an oversold condition. Now, this is ideal that the oversold RSI condition that we hit stayed, well, intraday, it kind of went below an intraday high from the summer, or last winter, I should say. But on a closing basis, we stayed above previous highs. So this is kind of what you want to see. So we might be looking at that. We might be looking at one more shoot to the upside, but then we will pull back down and hopefully test that 50-day moving average. The one thing we can draw on this chart, and I'm going to make this green because it's bullish. We can draw a triangle. And I really like my triangles. We can draw it kind of like this. Pull this back a little bit. Like I said, I don't like intraday highs and lows. I like the closing highs and lows. And now if we take a look at the height of this triangle, it's going from about 620 and we fell to about 520. So that's about $100 on the price. So if you project the breakout of this triangle, we're looking at $100 upswing to about 720. So that's our projection from the triangle. Now we also had a bearish triangle, also called the descending triangle. We'll do this and we'll do this. And that took place, that was more of a symmetric, but depends on how you draw it. Yeah, probably better off making it symmetric. So we can probably do one of these on the symmetric triangle. And again, the difference is from about 775 to about, sorry, from about 575 to 775. So you were looking at a $200 drop, and we fell from about 660. And intraday, we fell to about 480. So intraday, we almost made the cut. On a closing day, we didn't really reach the target, but it was pretty close. So I really like these triangles. They give you some objective as to where we should be reaching. So keep an eye on 720. That would give us a target from the ascending triangle, which would be a nice target before a pullback back to the 50-day. Okay, everyone, if you're in Vegas tomorrow night and the next 2 days, I am there for Coin Agenda, which is a conference. And after that, I'm back in New York for maybe a week, and then off to another conference in Argentina, La Bitcoin Conf. So if you are in Argentina, you can find me there. Please reach out, subscribe, follow me at Twitter, AntoneLLT, and follow my blog. I'm going to try and write some more articles. I posted one today about Steemit. I need to tweet that out. All right. Thank you very much. And good luck trading next week.